Ladies and gentlemen, good day and welcome to the Q2 FY21 earnings conference call of MITSU CHEM PLAST Ltd, hosted by Kiran Advisors. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vastupal Shah from Kiran Advisors. Thank you and over to you, sir.
Thank you. Good afternoon, everyone. I would like to welcome Mr. Manish Didya, Joint Managing Director and CFO of MITSU CHEM PLAST Ltd. Manish sir, over to you.
Hi. Good afternoon, everyone. We hope that everyone is safe and healthy, as well as know that COVID-19 has created a lot of havoc in our lives, and these challenging times, one should be calm, cool, and try to be happy in their life. One hand, today, where the second phase of lockdown has been implemented in major European countries like France, Germany, Belgium, etc., due to the rising number of COVID cases. On the other hand, in last week, US election have been concluded and the new powerhouse of US would be bound to take tough stance on China, as it is going to be a fight for global dominance, and due to this, India would have a positive impact on its economy. Now that our factories have started working with maximum capacity, but however, we are following restrictions like social distancing. We are still having erratic cases in the near vicinity, but it's a part of life which is now the new normal. We are now seeing that our economy is getting back on the track. The impact can be seen as the current quarter was one of the best in recent years. We have seen huge demands in packaging products and hospital furniture products. Talking about the business, last quarter, the turnover of the company grew by 35% from 33.40 crore to 45.17 crore year on year. Also, the EBITDA grew from rupees 4.69 crore to 6.57 crore, which shows the upside of 40% in the same way. Our PAT growth was also on the similar lines. In quarter 2 FY21, PAT was rupees 3.19 crore against rupees 1.35 crore in quarter 2 FY20, which shows the growth of 136%. Along with this, our margin also got improved. EBITDA has witnessed improvement by 50 basis points to 14.54%. Also, PAT margin has improved by 302 basis points to 7.06% year on year. Since quarter 2, we are focusing towards improving our margins and also have started the process of improving output efficiency of manufacturing equipment, which has helped us to improve our bottom line as well as margins. So if we talk about the growth experience by each product category, our packaging business has seen a growth of 27.84%. The hospital furniture business grew by 98.05%. Automotive component business grew by 45.50% on year-on-year basis. So we have introduced some of the new products also in the hospital furniture. For the quarter, our factories have been working at around 80% capacity of our total available capacity. For the period, our working capital cycle was 67 days, for which the improvement can be seen of 13% over the last year. We are seeing the shift in the way people live this new normal life. Most of the households are giving more and more emphasis on hygiene. Hence, I believe the demand for our packaging products will see an upward trend. Also, our packaging material does not have any scalable or user-friendly alternative. Hence, we would also see robust demand in coming years. The anti-China sentiment is also helped us in the multiple products categories like packaging, where we are seeing a demand boost from the industrial packaging. Also, one of the prime beneficiaries is hospital furniture part, which is a pure import substitute. We were the first player in India to start manufacturing of hospital bed products. As we see in COVID-19 period, maintaining a metal bed is becoming difficult for hospital, and with the new normal, where hygiene standards are expected high, we would see a lot of demand in this product. And also, since there are a very less competition in the category, there are a lot of scope for us to scale up. On China front, we are also keeping eye on which major players are shifting their manufacturing base from China to India across industries that we cater to, and how can we reap benefit out of the situation in hand. We are shifting our focus from the automotive components product to other products which are providing more profit and good growth opportunities. We are going to see the impact of lockdown in Europe on raw material prices in the coming quarters, and the company is well prepared for that and has already started taking the required measures. As I said earlier, we have started working on the improvement of our operational efficiency. We have put various implementation in the place and expecting good results out of this activity in coming quarters. Lastly, we would like to inform our company has been awarded Compliance Champion SME 2020 at Compliance 10x10 2020 hosted by Legacy Service for the continuous efforts taken by the company to achieve better corporate governance. So now the floor is open for the question and answer session, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nilesh Karani from Magnum Equity Broking. Please go ahead.
Yeah. Good afternoon, sir.
Good afternoon, sir.
Sir, hope everything is very well at your side also. And the first question would be like, just as you told right now, just UK and all of Europe is going into lockdown. So basically, we need to do then inventory management, and you have to order your raw material in advance, and all those things. Like how are we doing that? Can you just throw more light on that part?
Okay. So as soon as that the US and UK and this other lockdowns has started, we are procuring some of the materials and we are keeping some of the inventories for next more months to run our factory smoothly, where we are dependent on import of our raw materials.
Okay, but then what would be that overhead, the cost, and how would be your margins panning out? Just a rough idea about all that.
Yeah, so overall margin will not be affected because the some of the material will be coming like when we book the material. So material will come in a different days. We have kept that kind of arrangement, and even if the lockdowns and everything goes a little more, then the prices will go up somewhere, we feel, and hence we feel that the margin will not be impacted so much. But on the other side, like we have a good orders also, so at least we can run our factory 100%.
So from here, if you say next 2 quarters, so we would be having a better growth than what we have seen right now, or the growth would be stagnant or in line with what we have done. Like yes.
Definitely, there will be a good progress. So this is just a start off of the quarter. As like after the lockdown, definitely we will have a good growth for next 2 quarters as well.
So where is that traction building up? Where is that growth? Where you see that growth coming from? Just if you can give us a rough idea about.
So the major growth is coming from both packaging and hospital furniture. So both we will have a very good growth.
Okay. And sir, our debt, our short-term and long-term debt, can you talk about that?
Yes. So please go on. What is your question?
So what is our current debt like in short term, and what is our current debt in long term basis? And
yeah, so overall debt is around 60 crore plus, 60 crore, and yes, there is some plans we are going to chalk up in the next 2 quarters with this profit also is coming up now. So we will definitely have some of the repayment plans. So we are not ready right now for repayment of the complete these things, because I will not say the new normal has started 100%, but even again new second lockdown has started. So definitely we will have right now we will be having some cash reserve with us.
Okay. So going forward, even our margins will improve. Like last time we discussed, 4 points to 5 bips will increase our margins. So right now also the same guidance for next 2-3 quarters, or what would be?
So we expect a little good margins than what we are doing right now. As I said, we are doing a lot of overall efficiency of our machines and all. So we are doing a lot of changes in our plant side, and we are able to achieve good production, and hence we are doing the sales. So definitely, we are doing improvement on a daily basis, and we are monitoring the same also.
Yeah, sir. Thanks for your update. I'll get back in the queue if at all.
Sure.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Mansi Shah, an individual investor. Please go ahead.
Hello.
Yeah, Miss Madhvi. Yeah.
Good afternoon, sir.
Good afternoon.
Congratulations on the number you have achieved, and to follow that, I just want to ask a question. Like, as you mentioned, you have started optimizing the plant. What kind of optimization process we are doing?
So very small changes. What we are doing is like wherever the cycle times of the product we can reduce, the mold changing time, the color changing time, and the small issues we are taking, and some of the numbers has come because of a lot of consolidation done we have in last 2 years, and now the results are coming up. Consolidation, expansion in the last 1 year time. So we have just built a new factory in the month of January 2019. And then we did some new takeover of some machines in the month of December 2019.
Okay.
So all this impact good results.
Oh, nice, sir. And to follow on that, and the next question is like on what front will be the margin improvement for the same, and by what time the whole process will be completed?
I'm sorry, you need to repeat your question, please.
Okay, so on continuing what you said, on that front, I want to ask what will be the margin improvement for the same, and by what time the whole process will be completed?
So I'll give you second question answer first. See,
Okay.
this will be, there is no completion, because what we believe is the change is constant and the improvement is a constant. So we are doing, every time better, and this is what the mantra we have. So how can we do better things every time?
Okay. And sir, one more. My last question is: any expansion plans as of now? Do you have any expansion plans?
Not as of yet right now, but we will definitely announce something.
Okay, sir. No problem. Thank you so much, sir.
Okay, thank you. Thank you very much.
Thank you. The next question is from the line of Rajesh Gupta from SBI. Please go ahead.
Yeah, hello. I hope I'm audible to all of you.
Yes, sir.
Yeah, thanks for the opportunity, sir. Just wanted to ask you a few questions. One with regards to your, preferential allotment you did in 2018 to promoter, if I remember correctly, at 155 rupees per share. So, is there any lock-in period for those investment, or the people who invested already left the the investment forum?
Yeah, so we did in November 2017 preferential equity allotment. There was a locking period of 1 year from the allotment date, from January 2018 to January 2019. That's it.
Okay, so they are already exited, or they are not there in the list, right?
No, they are not into locking period.
Okay, so have they sold or still there in the company? As an investor.
That's I think individual, because I don't there's a lot of deal going on, but
okay, no issues, sir, no issues. And sir, you did well in terms of EBITDA, but the margin, if I look at on a sequential basis, it has dropped by around 100 basis point approximately. So while you are doing good, enhancing your EBITDA, but the margin continues to really suffer a little bit. So how sustainable these margins are, and is there something to do with the higher raw material cost, because we've seen a spike in the crude-based derivative products? So can you throw some light on that?
Yes. So yes, definitely there was a good demand supply gap between in our raw material, which was HDPE initial years. There's the last quarter, and the prices were little higher in this quarter too, and definitely there's a little impact on the raw material price. But going forward, I think price maybe remain same or a little go up on the Q2 level. So margins, and your question, another question was like, this margins are sustainable. Yes, it is, margin are sustainable. As I said, we are doing a lot of improvement in day-to-day activities, as well as we are doing a lot of this customer base also. Wherever our raw material prices increases, we ask them to give us increment in the prices. And I think everyone knows that the prices are going up, and yes, they are giving us the same increment.
Okay, can you give us some more details on this packaging business, sir? Are you also into FMCG packing or packing for, let's say, smaller granule packaging business? or is
Sir,
it for one?
you need to repeat. Sorry for that, but I think you need to repeat.
Yeah. Can you give some more details about your packaging business? Is it more into B2B or B2C? Are you into more granular packaging business, or it is basically mainly meant for large packaging?
Yeah. So I'll say MITSU CHEM PLAST Limited is one of the company in India who is having a largest range from 100 ml to 250 liter under one roof. So all my factories having the same range, and we have a different sizes, like from 100 ml to 250 liter, and right now very good demand from all the sizes of products. But majorly, if you ask me, majorly it is a 200 liter and above. There is a big demand.
So I think this is mainly meant for B2B packaging.
Yeah,
business.
completely B2B. We are into completely B2B.
And who are your customers in this segment, sir?
So I mean, like customers are chemical giant. You can take bigger names. Pharma giants, like you can take some of the names, and lube oil. These are the major our customers, and also we supply to pesticide customers as well.
Okay. And you are there on the BSE. Last time we discussed, you said that shortly we're going to get list also on the NSE as well. So any movement or rather any progress on that?
So unless and until NSE change some criteria, so right now I'm not fitting into that criteria. But I think I just heard something is going on with the criteria, like whatever the SME, BSE SME company can also migrate to that. So I think that talk is on, and I think it's already 3 months past now. We do not know the exact result, but I think something is going on. So if we are eligible, definitely we will be going into main board, this NSE also.
And sir, your automotive business, what is the situation there? Have we seen any? Because currently what we see is only OEMs are doing well. What is the impact on the auto ancillary companies? I mean, what is your presence in that segment? And if you can just give some.
So overall presence of that segment is very less compared to other business. Mm-hmm. And we are now not too much focusing on that area. So, as you said, overall automotive growth will come up in next year time. It looks like. Right now, I know we can see in the papers there's good figures coming up, but yes, there is a good inventory also with them. So people having inventories and all these things were there. So I feel automotive sector will maybe back with it for ancillary especially by next year. Looks like.
Sir, for 6 months you did some 77 crore rupees of turnover. If I just extrapolate this number, it could be 140 crore rupees for FY21. So where do you see this number really, scaling up? I mean, where you see what is it basically vision for next 4 or 5 years?
Yeah, perfectly right. I understand your question, so maybe I can go on that. So if we can concentrate. So I think whatever we have achieved in this quarter will remain for 2-3 quarters. For second, third, and fourth quarter will remain same or little more than that.
No, my question basically is more long-term in nature, sir. I mean, I'm looking for the answer, let's say, for 4 or 5 years. I mean, where you see as a small, let's say, MSME company really getting into a 300-500 crore club. I mean, so what is the time horizon, or what is that vision that you that you can share with us for next 4 or 5 years?
Yeah, so our vision is like our management vision is like we have to achieve 500 crore turnover in next 3 to 4 years, and I think we are working towards the same Little bit. I think we're not going leaps and bounds, but we're going little slow. But yes, we have some vision that 500 crore turnover should be there with at least with a very good margin of PAT.
Okay, sir. Thanks and all the best.
Thank you, Rajesh Bhai.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Hi, thanks for the opportunity. Am I audible?
Yes.
Okay, great. So my first question was just trying to understand the business a bit better. What percentage is coming from the hospital furniture, and are there any other verticals like auto or others where you are getting your significant percentage revenue from?
Yeah. So hospital furniture is around 12% of total turnover.
Okay.
And the major is industrial packaging only. So that is around 86%.
So when you say industrial packaging, and I see your client list here, but if you can just give a little bit more color on that, should we just assume this picture that you have in one of your slides where there are different kind of containers? Is that what one should understand when you say industrial packaging?
Yes.
Okay. And then you were saying something about auto, and I wasn't very clear as to why you are de-emphasizing auto.
So there are. We are not. Because of the market only, because we have some limited production capacity right now, and we have other business surging good, and some of the good margins are there. So we might decide on whichever the better margins business, and we will definitely go forward to that business. So example like if industrial packaging or hospital furniture gives a better margin and better thing, then we will definitely switch over from automotive to other business. Because right now automotive business is not that lucrative and that good.
I see. And do you have any capex plan in the near term that you have announced or planning to announce?
So yes, looks like, but maybe we will announce in some time.
Okay.
Yeah.
And my last question, and I'll get back in the queue, is about your cost, right? So you are obviously very heavily dependent on the crude, I'm assuming, and to the extent oil prices go up and down, you benefit or take a hit. How does it work with the customer? Do you get a pass through? Can you pass the cost to the customer, or you have to just handle it internally within your system?
No, definitely we get some of the costs we get immediately. But when sometimes they increase small prices which we don't get immediately. But yes, if the prices goes up by around 3 to 4% plus, then yes, definitely we have to go with the customers and we have to take that thing.
Okay. And do you have any long-term targets as to where you think this business could be in 3 to 5 years?
Yeah, as I just said to Rajesh, that yes, our vision is around 500 crores in next 3 to 4 years. That is our vision.
And what would be? Sorry, I did hear that. But what would be the EBITDA margin associated with? So once you are at 500
crores. Whatever we do turnover, but EBITDA margin, we definitely will be the same. What right now 15 or 17%, that will be the minimum. But definitely we work on when the larger the turnover, obviously your EBITDA margin also will increase a little bit. But the minimal 15 to 16% EBITDA level we'll have to follow.
Okay. All right. Thank you. I'll get back in the queue.
Thank you.
Thank you. The next question is from the line of Kranti Batri from Wealth Mill Securities. Please go ahead.
Congratulations for the good set of numbers.
Thank you.
During this kind of pandemic time. Just want to know what are the segments that caused the revenues to go up? Can you just share? And what are the segments which you foresee there will be a further pent-up demand you can foresee in the next coming quarters?
Okay. So majorly will be, again, two major things, industrial packaging and hospital furniture only. For next 2 quarters, what we are targeting, so I think it will remain the same, industrial packaging and hospital furniture, almost same percentage will remain.
But if you see the sequential quarter, okay, last quarter to the current quarter, okay, the revenue improvement came from which segment?
So see, 86% come from industrial packaging and 12% came from hospital furniture. And the others, like 2% was there, automotive components and other things.
Okay. Now, we're coming to, due to this pandemic and all, hospitals are increasing their bed count. There is a lot of exercise was going on. That is impacted you positively? Because hospitals are planning to increase their number of beds and all. That is subsequently your demand might go up.
Yes. I think our Prime Minister Sri Modi ji also announced a big package on health, these things, in the last budget, and definitely there are good medical facilities going on in India, and hence the requirement is going up drastically up.
Okay. So you see this segment can be you can see further improvement.
Yes, very good improvement.
How the margins in this segment, sir?
It's a better margin than packaging things.
Okay, sir. That's it, sir. Thank you.
Thank you, Karthi.
Thank you. The next question is from the line of Shanti Patel from SP Investments. Please go ahead.
Good afternoon, sir.
Good afternoon, Shanti bhai.
Yeah. Can you tell me what is the PAT margin, number one, return on capital employed and return on equity?
Sir, you need to repeat because some of the voice is not clear.
I will repeat. What is our PAT margin, profit after tax margin today, and what is our return on equity and return on capital employed today? And do you think that when the turnover will reach 500 crores, it will remain same, or probably it will go down or go up?
Yeah.
I think my question is clear now.
Yeah. But so around the PAT, right now RO, return on equity is analyzed is around 36.51%, and compared to last year it was 13.17.
So it has jumped from 13 to 36.
Yes, annualized. So we are calculating with this quarter. But
no.
Annualized, if you effect, it will be 13 to 36%.
Oh, fine. So that means return on equity for full 1 year is approximately 36.
Yes, sir. Yes, sir.
What is our PAT margin? Profit after tax margin?
Yeah, our PAT margin has gone up by, we've done 318, 3 crore 18 lakh rupees.
No, in terms of percentage, means profit after tax is...
PAT margin is 7-odd%.
Oh, 7. That is, I think, too low. I don't know, but I think it is. And will you think that same will remain when you touch your turnover of 500 crores?
No, definitely the PAT margin will improve. So we are, this is a very capital intensive industry. So definitely, once we have invested, so now this will come up. Definitely profit margin will increase. So here, as soon as you do more turnover, definitely your margins will increase.
No, but then the return on capital?
So
Return on
on
equity.
capital employed is right now 38.54% annualized.
Right.
Which was last year was 25.
No, that is right, sir. But when you reach turnover of 500 crores, will the return on equity will be the same, or it will go down or go up? Probably.
Yeah, it will go up.
It will go up.
Yeah,
sure. Thank you very much. Thank you.
Thank you.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, hi. One question is, what is your current capacity utilization?
Sorry?
What is your current capacity utilization?
So around 79%.
Okay. And are you seeing more incremental demand coming from industrial packaging, or how would you characterize the demand from that particular end customer segment?
No, you asked me. Sorry, can you repeat the question, please?
Yeah, my other question was that how are you seeing the demand from the industrial customers? Is it increasing? Is it getting better month on month, or is it still very subdued? Just wanted to get some color as to the kind of demand you are seeing.
Definitely. It's growing. Demand is coming up very good. So after the lockdown opens, a very good demand came up. And yes, still the demand even in the October month also was very, very good. And so on in this month as well. So demand is coming up. People are, I think, started buying a lot of things.
Okay. And at what capacity level, what is your maximum capacity level in practical terms, right? Obviously, theoretically it is 100%, but...
No, 100% because we are talking about whatever we are saying 79%, it is achievable things. Against achievable. Okay. So yes, we can do achievable 100%.
Okay. And then could you increase that 100% further by adding shift, or that's practically not possible?
It's very difficult. It's not impossible, but it's very difficult. So somewhere we have to change a lot of things. So maybe, again we have to use some capitalize of the products, or maybe, we have to bring some new machines or new molds.
I see. Right. So, and do you have the infrastructure to do this incremental brownfield capex, or you will have to put up a new unit entirely fresh?
So yes, right now, yes, we have some infrastructure already ready. So we have built up our new unit, and there is an infrastructure already ready with us.
So what will it do to your capacity then? How much are you planning to add?
So that depends on the machine. So we have not yet decided.
I see.
But yes, if we decide something, this will be in the same premises only.
I see.
Yeah.
And then on the customer side, what would be the percentage revenue contribution from your top 10 or top 20 customers?
So we are generally running with the 80-20 rules. So my 20% of the customers are giving me 80% of the revenue.
I see. And if I say top 5, what will be that percentage?
Top 5 is giving me around 60% of turnover. Sorry, 58% to be very precise.
Okay. So you have a lot of, I guess you have lots of customers which are more than 10% of your revenue, or it is just 1 or 2 very large customers?
So 3 customers are very large, and the rest are some different numbers.
Got it.
Yeah.
Okay. Yeah. Thank you. That's very helpful.
Thank you.
Thanks.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. As there are no further questions, I now hand the conference over to Mr. Vastupal Shah for closing comments.
Thanks everyone for joining the conference call of MITSU CHEM PLAST Limited. If you have any queries, you can write us at vastupal@kirinadvisors.com. And once again, many thanks for joining the conference. Thank you.
Thank you. Ladies and gentlemen, on behalf of Kirin Advisors, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.
Thank you. Thank you.